Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you stocks for long-term investing. I will show you no matter what the current price of the stock, I will show you different option strategies that can be used to always keep you winning. Now, if you're new to options trading or you're trying to use options trading in order to make some additional income in conjunction with your already 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you some stocks for long-term investing. In order for this video not to be too long, I'm just going to do one stock. Now, if you guys want me to make a part 2 of this video, just go ahead and let me know in the comments below. Just simply put in part 2. Now, for today's video, we're going to be using none other than Alphabet, and the ticker is going to be GOOG. Now, in order for you guys not to be confused, you could either use A right here or you could use C. It does not make a difference. So you guys know how we do it. Let's go ahead and get down and dirty with options. So what we're going to be doing, as you can see, Google is having a very good day today and it's just breaking out to the upside, but that does not make a difference. I will show you how to navigate all of these as this video goes along. So firstly, in order for us to get started, we're going to go ahead and go to the advanced feature. Now, for those of you guys, I know most of you guys here are subscribers to my channel because most of you guys have a small account portfolio. Do not get swayed by the current price of the stock, which is $181 per share. I will, and I always do show you options that can be used if you're trading with a small account. So stay tuned for that. Do not get swayed. So let's go ahead and we're going to go into the advanced feature right here in order for us to open up the chart. Now, what we're going to do, we're going to go to the 1Y right here or the 1 year outlook. Now, as you can see, the blue line right here, which is the MA 200 or the 200-day moving average, that is usually around $175. So what that's saying is that Google has been trading at around $175 for the last 200 days or the last 6 months. Now, as you can see, Google has touched this price several times, so it provides a very, very strong resistance. However, it did break out, so now this $175 price is going to act as support. Now, if you go with me all the way to the left, you could see that Google has been trading around this price from since this is July 31st, 2024. So we're going to use the 175 for the basis of this video. Now you can see also that it went below it, it came right back up, it went above it, it came right back down. So hence a very strong support and resistance is going to be at the $175 mark. Now, how am I going to use this to my advantage? Let's go ahead and go back to Google right now, and we're going to jump straight into the options by going to trade Google options right down here. Now that we're here, we open up what's known as the option chain. The option chain is all this information down here. What the option chain does, for those of you that are new to the options and are new to my channel, the option chain gives us enough information in order for us to go ahead and make an informed decision before getting into any option contract. Now, before we go ahead and I show you these option strategies, I always have 2 requirements for both my viewers and my subscribers. And viewers and subscribers should be the same. So this is a good opportunity for you guys to go ahead right now and subscribe to the channel. Requirement number 1. Always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. The second requirement is going to be always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go against you, then you know how to get out of that trade. Now, Google has presented itself an opportunity. I will be showing you several option strategies that can be used, and all these option strategies you're going to be winning with Google. Strategy number 1. If you're trading with a big account, I would go right now and go ahead and buy Google at the current share price it is, which is $181 per share. That is going to run you around $18,000 in order for you to acquire 100 shares in order for you to do options. So if you are trading with a sizable account, that is one option. Now, if you do have $18,000 in your account portfolio, I still would not go ahead and buy it outright. I would be trying to make some kind of money with options trading. So what I would do, I would go right here to sell. I'll go right here to put, and I'm going to select a strike date. I'll be going for what's known as monthly options trading. So I will be looking for an options date that gives me around 30 days to expiration. That's going to give me August 8th right here. Let me see if there's any other better. No. So that's going to give me August 8th. August 8th gives me around 28 days to expiration. Let's go ahead. We're going to select that. Now, instead of buying 100 shares at $18,000, this is what I would do. I would go ahead right now, and we did establish that the $175 price is a very good support and resistance for Google. It has been around that for the last year. So the strike price I will be going with is going to be $175 per share. Now, because I'm doing this as an option strategy, instead of buying the shares outright, I'm going to get paid. The amount I'm going to get paid is going to be $4.25. $4.25 in the options world translate to $425 in the real world. And that's simply because each option contract contains 100 shares. So you multiply your 4.25 by 100, you're going to get 425. Now, this first option strategy that can be used on Google is going to be known as a cash secured put, and this is going to work if you're trading with a big account. Now, the reason why this option strategy is better than buying the 100 shares right now at the current share price is that you're going to be paid in order to wait for the share price to come back down. And I did show you the share price is going to be coming back down to 175. What we do not know is when. So why not do an option strategy where you're going to be paid in order to wait? So within 1 month, you're going to be paid $420. Now, the prices here are fluctuating because as of making this video, the stock market is open. Now, for those of you that do not have such a big account, this is the option strategy I would be using. I would be using the exact same thing, sell and put, and I'm going to be choosing the exact same strike date, which is going to be monthly. Now, in order to be a bit more conservative, because if you're trading with a small account, you need to protect your capital as much as possible. So I'll be going with $170 price right here. Let's go ahead. We're going to select that. Now, what I'm going to be doing, I'm going to be adding some protection to this trade. So this initial trade is going to be a cash secured put. Now, I want to protect my downside just in case anything happens, and specifically because I am trading with a small account. So to protect my downside, I'm going to go over right now to buy and put while maintaining the exact same strike date, and I'm going to choose the strike price right below. That's going to give me $165 strike price. Let's go ahead. We're going to select that one. We're going to hit continue. We're going to hit review, and there you have it. This new option strategy that can be used, particularly if you're trading with a small account, is going to be known as the put credit spread. The put credit spread is quite similar to the cash secured put, except for you need a lot less capital. The capital in this instance is going to be $500. So it works very well if you're trading with a small account portfolio. Now, how does this trade work out? Once expiration date comes of August 8th, all you need is for this share price to stay above the $170 strike price. Now, we did see that the support and resistance was 175. So by choosing the 170 with a small account, you have even increased the odds of this trade going in your favor. So once the share price stays above that, then you get to keep this amount of money here, which is $105. This $105, as soon as you decide to execute the trade, you're going to receive that into your brokerage account. That money is yours to keep no matter how the trade goes. So you get to keep that. In addition to that, you're going to get your collateral released back to you. The collateral in this case is going to be $500. Now, how do you determine your collateral? Your collateral is going to be determined by your spread. This is a put credit spread. Your spread is going to be your difference between your $170 sell put and your $165 buy put. The difference here is going to be $5. You multiply your $5 by 100 shares. Remember, we are dealing with options here, and that's going to give you $500. Now, that's another option strategy that's going to help you to win with Google. So the first one is if you have a large portfolio, you go ahead and buy 100 shares right now in order for you to do option strategies. The other option strategy that can be used, you're going to use the cash secured put in order to get paid to wait until the share price comes back down to something that you deem reasonable. If you are trading with a small account, then you could go ahead and explore the third option strategy, which is going to be the put credit spread. The put credit spread allows you to get into the trade, make money right away, and use a lot less capital. Now, I'm going to go ahead and show you some additional option strategies that's going to help you win with Google. And this is what I am doing personally with my portfolio. So let's go ahead. We're going to clear these parameters right now. And I'm going to show you what I personally is going to be doing. Now, for those of you guys that are not new to the channel, you guys know this is my actual bread and butter option strategy. So I'm going to be going now to buy. I'm going to be going to call. I'll be going ahead and select my strike date. The strike date I'll be using is going to be all the way out. Let's use a strike date of, we're going to be going with June 18th, 2026. Now, this strike date is going to give me 342 days to expiration. So what I'm doing, I'm buying myself a lot of time in order for the chances of this trade working out is going to be in my favor. So let's go ahead. We're going to select that. Now, the next step is to go ahead and choose my strike price. The strike price I will be choosing is going to be below the current share price. Once again, using the $175 as an established point, I'll be selecting the $175 right here. I'll be going ahead and clicking to that. Remember, I just showed you Google is having an upward run right now as of making this video. It does not mean that you need to go ahead and try to chase the stock. We never chase. So we established 175 as a good price. We're going to go ahead. We're going to select that. This new option strategy that I'm using personally in my option portfolio is going to be known as a long call, a leaps option. Now, a leaps option is a simple acronym that stands for long-term equity anticipation securities. It is a mouthful, hence we refer to it as a leaps option. Now, here is the good thing. Why would anyone want to use a leaps option instead of buying Google outright? Well, a leaps option works very, very well if you're trading with a small account portfolio. Now, you're able to control 100 shares of Google for only $2,780. So once again, you're going to multiply your 27.65 here, multiply by 100 shares, and that's going to give you $2,765. Now that you have one controlling interest, remember, you don't own the stock outright. You're now able to control 100 shares of the stock. You're going to have that in your portfolio. How do you win with this particular option strategy? That is so simple. Once you have this leaps in your portfolio, you can choose to do absolutely nothing. You simply leave this leaps option in your portfolio and you wait until the share price keeps appreciating over time. Remember, you do have an entire year in order for this share price to go up. And this is Google. The share price will go up. Now, once the share price goes up, you're going to see that this total option is going to be going up as well. So feel free to close this option contract whenever you have hit a desired level of gains. Now, this is just the first part of the option strategy that I would be doing in my own personal portfolio. Now, I do like to have these long calls or leaps in my portfolio, and I do have the patience to wait an entire year for the trade to work in my favor. However, while I do have them in my portfolio, I do like to make consistent income with them. So what I'm going to be doing now, I'm going to be showing you an additional option strategy. This is going to be the fifth option strategy that can be used with Google, and I'll show you how I use that to make monthly income. So let's go ahead. We're going to clear this right now. We're going to be going now to sell. We're going to be going to call. I'm going to be going ahead and do monthlies once again. So I'll be going to the strike date of August 8th. Once again, 28 days to expiration. This time, however, I'm going to be choosing my strike price above the current share price. And I will be going all the way up. Let's see what's desirable. So the strike price I will be choosing is going to be $210 strike price. Now that is pretty far away from the $180 strike price. And I do have a 93% chance of profit. As you can see, chance of profit above here. The reason why I'm going so far away from the current share price is because the whole purpose of me acquiring a leaps option in my portfolio is to have the patience and wait until the share price appreciates. Remember, I do have a year, but now I'm going to be trying to make some additional money, which is secondary to my primary option strategy, which is the leap. I will be choosing a high strike price in order for the trade this trade in particular to be in my favor. Let's go ahead. We're going to select that. So within 28 days or a month, I am now able to make an additional $75. 75 cents right here, multiplied by 100 shares. So I'm able to make some additional income while I hold on to my leaps option in my portfolio. Now, this is going to be a 92% chance of profitability, means there's a 92% chance the trade goes in your favor. However, there is an 8% chance that this trade goes against you. If that does happen, there are exit strategies that can be used. One exit strategy that can be used is known as options rolling. So what you're going to do, you're going to simply roll up this strike price. Rolling simply means you're going to be closing off your current option contract while opening another option contract simultaneously. That's what all rolling means. If you're not familiar with options rolling, go ahead and search the channel. Just type in options rolling. You should see a few videos there that's going to give you a complete walkthrough. So that is one option strategy that can be used. The other way this trade could go, come expiration date, this share price stays below the $210 strike price. Once that happens, you're going to keep this $75 premium you received. That's yours to keep no matter how the trade goes. And then now you're going to have your leaps option released back to you in order for you to go ahead and do this trade again for another month. You make consistent income with this by rinsing and repeating this option strategy. So there you have it, investors and future investors. This is one stock that can be used in order for long-term investing, and also you can be receiving some short-term gains, and that is going to be Google. Feel free to use either class A or class C. It does not make a difference. In order for you to do long-term investing, one of my favorite recommended stocks would be to use Google. The reason for that is that Google is a very established company. There are several different option strategies that can be used on Google, as I clearly demonstrated. That's going to allow you to win, win, win. So there you go. Now, if you guys want me to do a part 2 of this and show you an additional stock that can be used with long-term investing and you're still able to make some short-term gains, just let me know in the comments below. Remember, just go ahead and put part 2. Now, thank you guys for watching. Go ahead, like the video, subscribe to the channel. Most importantly, I do make these videos in order for me to put as much free content out there in order for me to help as much people as I possibly can make income with options, and eventually, like me, they could go ahead and move away from the 9 to 5. If you guys know anyone like that that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, we're going to help as many as we can get income with options trading. Now, until the next video, keep pushing your investments.